check out some stocks on the move in Toronto. We're joined by Bloomberg's Stephanie Hughes. Stephanie, you're watching Thomson Reuters.
Yeah, that's right, Andy. So Thomson Reuters, those shares are up as much as 2.3% today. That's the biggest intraday gain since early May, and it was enough of a gain to keep Thomson Reuters on the top TSX performers list for pretty much the entire trading day. And that's because Scotiabank analyst Mauro Yagi upgraded the company to a sector outperform rating from a sector perform rating, which is kind of like moving a stock to a buy from a hold rating. And him and his team said that the stock had not yet priced in the potential revenue growth stemming from Thomson Reuters' investments in Gen AI capabilities. According to his team's methodology, the relative valuation had been pretty much unchanged since 2022. Also, he said that the third quarter results will likely be pressured in the near term by these investments picking up at a time of weaker seasonality, but the margin should improve as we exit the year. So his team remains bullish for the 2025 and 2026 outlook, and it appears that he's expecting some upside to shares there, Andy.
I guess Thomson Reuters has these vast databases, legal and industrial, with gazillions of words, and Gen AI could be very potent in that to help people research the database, for example.
Yeah, it seems like a natural fit to, like you mentioned, an information technology company that's leveraging this shiny new toy of AI and seeing where it can make these tools easier to use. So yeah, it seems like more of a long-term play for the company. Like Mauro Yagi mentioned, it's going to be maybe a bit of pressure on the short term because they do have to dole out cash for these investments, but seems like a fit there.
And then also Bank of Montreal out of favor, to put it mildly. Another disappointing quarter.
Yes, it has not been a good day for BMO there. Those shares are down as much as 7.2%. That was the biggest intraday drop since last earnings report in May. And that's because just like that earnings report in the third quarter, the bank missed expectations with earnings of $2.64 per share. And those results were weighed by the bank setting aside more cash than expected for loans potentially going sour. So further to that, Jefferies downgraded the bank to a hold rating based on the weaker outlook for credit. And analyst John Aiken said that for the third quarter in a row in 2024, these earnings have been disappointing, and it was the second straight quarter that it was higher provision losses or higher credit provisions negatively impacting these results. And on top of that, Jefferies wasn't the only one that downgraded. TD just this past hour downgraded the company to a hold rating. So I should go back to Jefferies for a second, saying that they do expect that shares will come under pressure in the near term, but they do think the U.S. operations bode well for long-term investors. So lots going on in this earnings season already, Andy, and we still have a handful of banks reporting earnings throughout the week, so we'll be kept very, very busy.
Stephanie, always great hearing from you. Thank you very much indeed. That's Bloomberg's Stephanie Hughes.